ATM card.
No need to stress, I no need the stress. With Accion Microfinance Bank, I deal with the best, I no settle for less. Bank where they make it life better. With checking the money, you fit open account. Save money now to pay your bills. And you fit to get it loan to grow your business. Well, my future is bright, oh. My future is bright, oh. With Accion, oh. My future is bright, oh. With Accion, oh. My future is bright, oh. With Accion, oh. My future is bright, oh. Is bright, oh.
Accion Microfinance Bank. My future is bright.
Hey, Accion, star 572 hash. Na the code Accion, star 572 hash. Money go. Open accounts with Accion to save for tomorrow. There's an easy way to bag every day. Hey, star 572 hash. Now here be the code. I know get wahala. Oh, it's a life. Oh, money on the go. Star 572 hash. Oh, get a life. Oh, my future is bright. Star
Good afternoon. I hope everyone can hear me. Okay, thank you, Chinedu Anusi. Good afternoon, everyone. Welcome to, thanks, AJs. Welcome to another edition of Accion SME Hub. So we would, I think we'll just dive right into it. We've seen some engagement saying that we're starting 12. Yes, we do like to start very early, exactly 12, but we're trying to see if we'll let some other customers join. But I think we'll just go ahead and start, and then they will join us while the session is going on. So on behalf of the management and staff of Accion Microfinance Bank, I'd like to warmly welcome each and every one of us to another edition of the Accion SME Hub. It's an interactive platform where we bring key experts and stakeholders to share knowledge and insight regarding topical issues. For some of us that's just joining, my name is Adifisaya Akisoya. I'm the Head Marketing Communications at Accion Microfinance. Of course, to join, please ensure you follow the bank on all social media handles at on Facebook, Twitter, LinkedIn, Instagram, YouTube as well at Accion Microfinance Bank. The admin would drop those channels so you can also follow us. We have so many giveaways and other activities, so it'll be helpful if you could follow us. So without further ado, before I actually get into the session, I want to quickly do very few housekeeping rules. So what we like to do is to do like a quick intro, then after the intro, we would go into the presentation. And then from the presentation, we will take question and answer, and then we can close. So while we're having the presentation, I'd like to please request that we hold some of those questions. I would also still confirm from the panelists what works for them, but we usually request that people hold some of those questions, note it somewhere, and then share during Q&A so we don't miss any of them. Of course, we have a Q&A box where you can drop your questions directly. Now, if you can't hear well, this is better. Okay, thank you. Okay, Matthew can hear well. Okay, so I hope everyone can hear me well. Okay, great. So if you could just please hold on to the questions, and then we'll take them during the Q&A session so that we do not delay them. We have a very, very smooth process. For you to drop your comments can be in the chat box in the webinar. If you also like to speak, you can raise your hand below your screen, the different emojis. So you can just pick the one that has the hand open, and you can click on it, and we would unmute you so you can ask your questions very, very quickly. I think that's all. Thanks for joining. So without further ado, we do have this session is actually very special, very, very different, because normally we usually have one key speaker or panelist engaged, but two speakers that will be bringing in their insight and perspective, and we're very thankful and excited to have them on the call. So they'll be sharing with us, business owners, how do we manage risk, how do we identify them, and then what can we do differently. We're very excited to have them. So they're from EY. Thank you, EY team, for joining and then for honoring Accion's collaboration invite. So I think I'll just go straight into the first speaker. We have Abiodun Ogunoiki, Associate Partner in Ed Financial Services Risk Management West Africa Consulting. He is the partner with over 15 years experience as a risk consultant and as the Deputy Chief Risk Officer of a Nigerian bank. He's a CFA charter holder, a certified financial risk manager by the Global Association of Risk Professionals, a certified internal auditor, and a certified fraud risk manager at the Chartered Institute of Public Finance and Accountancy. Mr. Oguneki, I think I should find a nickname for you, Mr. Certified, because this profile or CV is quite intimidating. Abiodun's experience cuts across the provision of financial risk management, enterprise risk management, forensic, internal audit, corporate services. He's an associate partner with over 15 years experience as a risk consultant and as the deputy risk officer of a Nigerian bank. He's a CFA charter holder, a certified financial risk manager by the Global Association of Risk Professionals, a certified internal auditor, a certified risk fraud manager by the Chartered Institute of Public Finance and Accountancy. Thank you very much, Mr. Ogunaike, for joining. I think I'll also take Mr. Osuji's profile very quickly, and then I'll use the floor for Mr. Ogunaike. I don't know if you want to be called Mr. Ogunaike or you prefer Abiodun, you can let me know. So, okay, good. We have, go ahead.
I'm fine with any.
Okay,
good afternoon, everyone. So please go ahead with the second introduction, then I'll come after that.
Thank you very much. Thank you very much. So we have Gerard Osuji, again, another intimidating CV, a senior associate financial services risk management at Ernst & Young. Gerard is a senior associate at EY, specializing in financial risk management consulting with over 4 years experience in financial services industry. He brings valuable expertise to this role. Previously, he worked at Deloitte West Africa as a risk management consultant, focusing on governance, risk, and regulatory compliance management. Gerard's professional background also includes working as a risk analyst at Stanbic IBTC Pension Managers. During his time here, he played a crucial role in assessing and managing risk associated with the PFA's financial markets exposure. This involved analyzing market trends, evaluating investment risk, and developing strategies to mitigate potential risk. It's really exciting to, have this detailed and very, very experienced professional join us. Thank you so much, EY team. We're really excited to have you and partner with us. So of course, I'm not the professional here, so I'm just going to use the floor and I'll let Abiodun and Gerald take off the discussion. Thank you. So if you want to go through.
Good afternoon, everyone. So I will start the session, and at some point, Gerard also will come in. So I'd like to share my screen so I can also be able to talk through the slides. I want to believe everyone can see my screen. Please confirm you can.
Yes, we can.
All right, thank you so much. So we're talking about risk management, and I will try my best to make it very practical. I have actually done risk management for about 15 years of my life, so it's a familiar terrain. So when we talk about risk management, what really are we saying? And I would like to use 2 examples to start with. So imagine you buying a new car, very expensive car, and you are driving to an express, but unfortunately, the car does not have a brake. What do you think will happen to the car? So that's the first thing to think about. The second one is to think about you want to fight a battle, or you want to fight an enemy, or, or probably boxing or whatever you might want to describe it. You are fighting someone. You don't know your capability, what you can do. You don't know how strong your counterparty or the person you are fighting is. How comfortable will you be a day before the fight? So again, it's another way of describing what risk management is all about. And risk management, in the big sense of it, is actually knowing your capability, knowing what risk you're exposed to, and then having measures in place to ensure you can manage those risks if and when they crystallize. So that is like a brief overview of what we want to talk about today. From this session, and you will have a high level understanding of risk management, and you will have equipped yourself with the need for you to be able to identify risk, assess risk, and mitigate potential risk in your business or businesses. And this will position you to be able to have a sustainable growth and also equip you with a robust defense against unforeseen challenges. Challenges are going to happen either we like it or not. Risks are going to happen. But the question is, are you equipped to be able to manage those risks? So as we go through the session today, we'll be looking at some key topics. The definition of risk. I mean, what is risk that we are talking about? What do we mean by risk? We hope that by the end of this session today, you will be clear as to what risk is, what are the types of risks that your business is exposed to, and just to mention upfront that the risk that your business is exposed to is different from the risk the other company is exposed to. So it's important to be able to understand what specific risk your business is exposed to. Then you will understand the art of risk management. How do you really perform risk management? And what are the steps to perform risk management for an SME business? Then we'll go to the do's of risk management, or do's in risk management as the case may be, and the don'ts as well. Then we have a question and answer session where we take all your questions. So as Fisayo has mentioned, please post your questions. We'll be happy to take your questions because that makes us also bring it to you. So what is risk? So we define risk as an event or situation characterized by uncertainty, where there is a possibility of an adverse outcome or deviation from expected results. It represents the potential for events or circumstances to unfold in ways that may have negative consequences. So when we look at risk, we look at an event that can change your business. And sometimes it could actually result in when we talk about risk, it's important for us to know that if there is a change, we can also latch on the change, and that will result into us losing more money as a business. So two major things that have happened, or two key things, some of the two key things, or two of several that happened in Nigeria recently, is either the total removal or partial removal of the subsidy, as the case may be, and that has impact on several businesses. For some businesses, it's positive. For some businesses, it is negative. Another event that has happened, which is also a risk, is the unification of the exchange rates, which for some business, again, is positive, and for some business, is negative. And I would believe that for most businesses, they will see it as a negative impact. So the question then is, how prepared were you before those changes were implemented? And how has it really impacted on your business? So these are just some practical examples to consider when we look at risk. So when we look at risk again, we look at risk under financial risk and non-financial risk. So financial risk, meaning the risk that can have direct impact on your bottom line, which is your income. So we look at credit risk, we look at market risk and liquidity risk. So what is credit risk? Credit risk is that the risk that you give an asset or an item to somebody and the person might not give it back to you, essentially. So once you have anything that is of value, that's yours, that you give it to somebody who is not you, then you have introduced credit risk. It can be as close as even your brother, your sibling, family member, whoever it may be, or another business it may be. As long as it is not with you, there is an introduction of a credit risk. And it can express itself as a default risk, which means that the person you're giving it to or the company you're giving it to will not give it back to you, or will not give it fully to you. The other risk is concentration risk, in which case, when you look at the people you are doing business with, it's like you're only doing business with one or two people. So if something happens to the business of one of those two people, automatically it's going to impact on you. So that is where concentration risk actually comes in. And what we typically advise is that you actually spread your risk, that you're not concentrated to one person or two or three different counterparties. The second type of financial risk is market risk. And when you think about market risk, there are four key factors. The first one is interest rate risk. And this comes into effect, for example, when you take a loan and the rate on the loan has gone up, and sometimes it's not because no one wants to just make life difficult for you. No, they are also responding to the environment around you. So in a situation where the rates they are getting, the liability that they are given also is high, ultimately, when you are taking a loan, it has an impact on you. And there are several reasons that has impacted on interest rate risk in recent times. The last inflation rate was about 26%, which shows that interest rates has really, really gone up. And it could have been induced as a result of removal of the subsidy, and also partly because also of the exchange rate unification. So you see the impact of the other risk coming and affecting from interest rate point of view. The currency exchange rate risk, it goes without saying. So when you see the Naira value at the beginning of the year, Naira value at exchange rate at today's rate, how much do you exchange $1 for? So that is where your current exchange rate risk comes into play. And the question is that for us as a country, do we gain more dollars the more we really buy more dollars? It's just those balance of payments most times that affects the current exchange rate. Equity price risk affects the costs or the share price of an investment, and that also could also affect you. So when you look at market risk, there are some that will not affect you if you don't have direct investment in equity. So maybe you don't have direct impact of equity price risk, except if the person or the business you are dealing with also has some investment in equity price, in which case it's ultimately have an impact on you. So equity price risk also is another form of market risk. And the fourth one is commodity risk, which is your crude oil price risk, and also probably your agricultural products risk as well. When the prices are also moving, it also introduces market risk to you. Liquidity risk also is very important. What does liquidity risk mean? I have money, but my money is not currently with me, and I need to pay somebody today. I don't have money to pay. Yes, I have money, but it's not with me. So that's your liquidity. So it's also important for you to manage your liquidity very well. You have different types of liquidity risk. We have the market liquidity risk and the fund liquidity risk. The difference between the two is that one, you have an asset. If you are going to sell it, you're going to sell it at an haircut. You won't get the full value because people are not agreeing to it, or people are not giving it the value you have wanted to get from that asset. The second one is how easy you can raise money. And this also has an element of your credit worthiness. So if you are if your business has high quality credit quality, you can be able to borrow lower or lesser rate than a business that actually have higher credit risk. So those are some of the things you also consider liquidity risk. There are other types of other risks which are non-financial. You have your strategic risk, you have your compliance risk, reputational risk, political risk, environmental risk, cybersecurity risk, health and safety, operational risk. I don't want to dwell so much because of time, so I'm conscious of time. So like I mentioned at the beginning, risk management is really when you put a brake into your car. So you know when to slow down, you know when to speed. And the comfort of a brake is that you can speed, knowing that you can apply the brake when there's an obstacle. But without a brake, you can't even you are filled with fear, you can't even take action. And again, risk management also is really looking at how the risk is in the market, how can they affect you, what do you have in place to manage the risk in the event that is going to happen. Then everybody can sleep well at night, knowing well that the business is safe because you have measures in place if those risks are crystallizing. So risk management is a systematic and structured approach to identify. I want also take note of those words in a different color to white. So you have the identifying, maybe like amber color, identifying, assessing, prioritizing, and mitigating risk. So which means that when you are performing risk management, you need to even identify what the risks are. You need to be able to assess it. Assess it means to quantify or to value it. If this risk happen, what do I stand to lose? And how frequently can this risk happen? Those things will come in when you're looking at assessing the risk. Then you prioritize the risk. You cannot manage all risk. So, because of the limited resources. So it's like someone that is selling cars and it says that because I don't want the cars to be dirty, I want to close or cover the car inside and all that. Then how will people know and things like that? So you can't manage all the risk, but the key thing you need to do is to prioritize. What are the risks that I really need to? I put my risk. And of course, by the time after prioritizing, you now go to mitigating those risks. Mitigating means that you are bringing down the impacts of that risk such that even when they happen, you will not really feel the impact and your business will keep going. You are all aware of different businesses that have started, but they could not continue because of certain risks, some regulatory, and we don't need to go globally, even in Nigeria. There are several businesses that came up during the COVID period, and today they are no longer existing. Some of them could have had some fraudulent intention, but there are some that they had good intention, but there are some factors beyond them which they were not able to surmount. And at the end of the day, they had to shut down. So all these risks affect the probability of you achieving your business objectives and your business goals. So just to also put some structure to what we've said, so you need to recognize or identify the risk. You need to analyze or assess the risk, which is to measure it. You need to treat the risk. You need to evaluate the risk based on your resources, and you need to review and report the risk. And because we're looking at an SME business, probably you are the owner of the business, you also need the information about how the operation is, the risk, and also how risks are being mitigated. And that is where reporting comes in. Because if you don't have the information about your business, how then can you adequately manage your business? So it's also important for you to be able to get information from your risk team and be able to take necessary action. So the next step is to look at them one by one. What is risk identification? So at this point, you're really looking at your business and looking at what are the risks I'm exposed to as a business. And it's important for you to adequately assess them. So you don't have to have all the risks I mentioned above in prior slide, but you need to be able to know which one applies to you. Do you give credit? Hence, credit risk will come in. Do you pay people and receive money? How do you do cash and carry? And if that is the case, you always have cash most times, and then you can pay. But if you do credit sales, then you're going to have a liquidity problem, in which case you're going to have a liquidity risk. So things to do is that you can review some of your business documents. You can also have, if it's more structured business, you can have risk workshop between different people in your company. What are the risks that you are exposed to? You can do a SWOT analysis, your strengths, your weaknesses, your opportunities, and your threats, and you position yourself as to what you need to do. So it's not something to just do the SWOT analysis, it's what you then need to do when you do the SWOT analysis. You can also conduct interviews and surveys depending on how big your organization is, or you can just call some key people in your organization and do some brainstorming. What are the risks that we are really exposed to? So that helps you to identify the risk that you're exposed to. The next is risk assessment. So risk assessment really is how do you measure the risk? And you measure the risk under two major umbrellas, the likelihood and also the impact. Likelihood is what is the probability that this risk will happen? What is the probability that my trusted counterparty or business partner will actually do something negative to the business or not pay back? Then if the person doesn't pay back or this risk crystallizes, what do I stand to lose? That is where impact comes in. So we measure risk based on the likely probability of it happening, and also if it happens, what is the impact on you? Now, risk treatment. There are four major types of risk treatments. The first is to look at a risk and say, this risk is actually more than what I can take. If I go into this business, the regulator may frown at that. It could be the CBN, it could be SEC, it could be a regulator. I don't want to do what is contrary to the regulator. As such, I will avoid this risk. I will not go into a business that regulator has not approved. That is risk avoidance. Risk reduction. I want to take this risk, but I want to reduce the impact on me. I want to do X, Y, Z. So that is risk reduction. Risk transfer. I want to go into this business, but I'm going to have some risk. But I don't have the capability or people to manage this risk. I would rather transfer this risk to a company that can manage it very well, maybe insurance company. So you take an insurance. So that's like a risk transfer. Then risk acceptance. I want to do this business, but the risk is not so much. I don't need to do anything. I can just accept the risk and move on. So every time we have risk, we should be able of this. The major one we do is the reduction when we take it. But if it is beyond our risk appetite is the appetite of what we can take, then we have to avoid or we transfer. Talks about how do you prioritize it. So you have seen all the risk, you have talked about all you want to do, or you need time or 3 years time, and then you also communicate your evaluation process as well. Now, what are the do's in risk management? What do you need to be conscious about? The first one is that you need to have a very clear framework. You need to have a risk management framework that tells you the risk you are exposed to. How do you intend to identify those risks? How do you intend to manage the risk? Who is responsible for managing the risk? Who is responsible for reporting the risk? So that clear framework must exist in your organization. My apologies. So I will just go back a bit. Please confirm you can hear me now.
We can hear you.
Okay, my apologies for the internet a bit. Which talks about what are the risks you're exposed to and what do you have in place, who is responsible for managing those risks. That you have to continuously identify the risk, what you typically call the emerging risk. So you have to ensure that it's something you do consistently, and you consistently also assess those risks. So once you identify it, you assess the impact on you, the likelihood on. Point is that you have to prioritize those risks. Like I said before, to identify them, but there are some you can accept because of their low impact. But you need to prioritize what are the activities that you want to do, what are the ones you want to put more resources on. So the way I will say it is this: if you are a business that you are into much of credit sales, or you give a lot of credits, then you need to prioritize the process of giving credits. So sometimes you might have to ask for some information or some close to, I'll use the word close to collateral, because yes, most of these businesses are small and medium scale enterprises. So you need to look at how to ensure that your money is not fully out. You can limit what you give per time. You can have a revolving kind of nature where when you give some, you collect back before you give the next credit sales and all that. So there are different things you can actually consider at the point when you are prioritizing resources on managing those risks. The fourth point is to implement the proactive measures. So most times businesses exist without having strategies of how to respond quickly. So in a situation where you even have a risk crystallized, how quickly can you respond? So there's a key word we called resilience, which really means how resilient are you as a business? Something negative happens now. How quickly can you respond? And sometimes you could also learn from what true and quickly respond. And then that takes me to the next point, which is to create a response plan. Typically, what you do here is to have like a contingency plan. For example, if I look at liquidity, in a situation where you need to pay certain people or pay a business, but you don't have the fund in, you can have in place a contingency funding plan, which means you have a bank which can easily give you credit, or you have someone who can easily give you till you get your fund in, and then you can be able to make unnecessary payments and go back to where you used to be. So it is important to have a contingency plan, and also that helps you to prevent unplanned events. Then the last point on the do's is that you also need to educate and train. It's important for them to embed within the business risk culture. So when they are selling, what is the probability that the person they are selling to, for instance, will not pay them back? What have they done to be able to ensure that they can get the money back and they are not giving money away in the name of selling? So all these things are very important, and training is very key. So the last slide I would like to talk on is the don'ts. So what should you not do? So number one, don't underestimate or ignore risk. Don't have the belief that everything will be fine. Don't downplay risk. So downplaying risk is like the person that bought a very expensive car driving on the express and is without brake. So don't underestimate risk or risk management procedure. Number two, don't forget to learn from the past. What mistakes have you made in the past? Don't beat yourself too much. Question is, what can you learn from the past that can prevent you from making the same decision going forward? Or what can you even learn that can even help you to protect your business or make you earn more income going forward? Number three is, don't assume one size fits all. Oh, now I've hired a risk manager or someone, so I don't need to worry about anything again. Oh, my other competitor, this is what they are doing, so I don't need to really bother about it again. No, you must always reevaluate your risk, reevaluate your risk management strategies, and ensure that they are fit for your business. The fourth one is, don't set and forget. So risk management is not continuous basis. You continually reevaluate, you continually monitor, you continually report, you continually make improvements. That's why you have what is called a continuous improvement. You are continuously looking at how to improve the business. Then the fifth point, very important, don't ignore the cultural aspect of risk management. So I talked a bit about that in the last slide, that a risk-aware culture is very critical for defense, because there are times that you have not even anticipated a risk, but because your team is risk-aware, if there is a good culture, they can pause, they can look at the situation and like there's a risk here, and they can also get you, the owner of the business, involved. Or if you are a key person, get involved in that operation. So the constant, and if you are also the one on the desk taking an action, you also need to be aware of risk. Everything you are doing, ask yourself, what could go wrong? If there's certain things that could go wrong, next question is, what do I have in place to prevent this thing that I think could go wrong from happening. So that is like a risk management culture or a risk-aware culture. And the last part, which is a mirror of what we've said before, is that don't ignore training. Don't ignore bringing to the attention of the company things that could go wrong and things to do in the case of things going wrong. So that is also a don't. Don't ignore training. It has to be an ongoing discussion. I would like to pause here, and Gerard, maybe you can also add a few before we hand over back to Fisayo for question and answers. Thank you.
Okay.
Thank you
very much,
Okay.
Abiodun. Okay. Okay. Thank you very much, Abiodun. So just to add to what Abiodun already shared, it is very important that we take the aspect of risk management in our business very important. As steps they are supposed to take when conducting risk management. Again, remember that the first step for you to solve a particular problem is identifying the problem, which is basically speaking to you cannot solve what you do not know. So a key aspect of risk management is you being able to define the risk, which is basically identifying the risk. And as a business, it is also very important that we set up our risk threshold. Now, you set up your risk threshold by defining what are your risk appetites, right? So what is the level of risk you are willing to take up for your business? And when defining your risk appetite, it is also very important to define, this is my appetite. However, do I have the capacity to take this risk? We've also highlighted the importance of ensuring that we have good strategies in terms of what are the treatments or the plans we have to ensuring that those risks we have willingly accept do not turn down the value of our business, which is basically ensuring that we continuously review, monitor the existing risk management procedures we have put into place. So don't assume the risk management system that has been in place is efficient and can span across the next 5 years. Remember that risk is always emerging. New risk crystallize every year. Giving an instance, in 2019, no one anticipated that the world would go short because of the COVID-19. So it is very important that we continuously monitor our risk management strategies, our risk management plans, and to also ensure that the process we've put into place is very effective to ensuring that they could manage existing risk as well as emerging risk. And the last part I want to mention is please do not ignore the importance of cybersecurity. We understand that the business environment is becoming a global and technologically driven environment. So it is very important that we keep ourselves abreast with the potential risk emanating from digital security. So it is very important have systems in place to ensure that you are clear in terms of how you want to manage risk emanating from cybersecurity. Thank you very much.
Okay, thank you. So I think this is the Q&A session, if I'm correct, right? Abiodun and Gerald, so I can just start
Please.
questions. Okay,
Yes,
great.
please.
Okay, great. So for some of us that are just joining, what we usually do is we do have a recorded version of this session, and then we'll upload it on the bank's YouTube channel. So I think that should be ready by tomorrow. So just give us till maybe tomorrow morning. And then in case you missed it or you joined us late, you can also join the conversation there. So if you have specific questions to the presentation regarding risk management, how are you as a business owner, how can you navigate or mitigate certain risks? You know, what are you currently experiencing, and how do you think you require help and support? And then we can provide you some of those solutions. So I think I have, again, if you also want to speak, you can just put your raise you and you can speak. But in the meantime, I think I have one, but this is peculiar to our product. So I'll just do a quick scan and see if my colleague is online. So I'll just take the question very quickly. Lola, there, okay, which is online. So but if you want to take the question in the Q&A box, and you say it's from Adeyemi Sekat Temidayo. So it's about the digital loan. And we can now take some other questions.
Hello, am I audible? Please, I currently cannot see any question in the chat box.
Can everyone hear me, please?
Yes, we can hear you.
Okay, all right, thank you. Thank you very much. So I need to be sure, because I think I dropped off a few seconds ago. Lade, can you hear me?
Yes, I can hear you.
Okay, great. So if you want to take the question in the Q&A chat
Oh,
box.
I said I cannot see any question in Q&A.
Okay, so I think I'll just read it. I think it's because you just joined. So Amade maybe Sekat Simidayo. Please, my question is that I applied for digital loan, but each time I added my ID card, the response I received was always no record found for this ID card. Please help me check to help me. I think I'll just drop it in the chat box again. So in case you need to read it. Did you get that?
Yes, I did get some part of it. You were breaking up at the end, or you can just drop it in chat, but then I'll address it.
Okay.
Thank you. Okay, I've seen it. Adeyemi, please, can you share your details with me, or you can just send it to our bank's official email address, info@actionmfb.com. Just send me a screenshot of what the error is and then your details, your phone number, your account number. Then we would fix the issue. Thank you.
Okay, all right, thank you. I think admin would also drop the contact details there. So please, Adeyemi Seka, please do not drop your details on this platform. And please ensure that once to send the email, just send an email to the address that we've sent you to and provide us with those details. And then the team will take it. Thank is peculiar to the presentation. Okay, so we have the contact details, and we have the phone number, we have the WhatsApp group, we have the email. So the email is info@actionmfb.com, and of course the website, the WhatsApp line. You can also chat with us on 07045 222 933. Thank you. So I'll just give maybe one more second. Abiodun, it seems I think your presentation was quite straightforward. We don't have questions regarding that. Okay. I'd like to know if the slide can be made available. I think with the permission of the EY team, it can be made available.
Yes,
but okay, great, thank you. But it will be made available to only registered participants, because we do have registered participant emails, so we can send that out. Again, for some of us that joined maybe late, we have a recording of this session, and it will be uploaded on the bank's YouTube channel by tomorrow. Thank you very much. Thank you, Engineer Edward Wee, for the feedback. So I don't know if there's also feedback, the feedback, comments, questions, recommendations that you want the Accion team or the EY team to speak to. Thank you. So we have what are likely risks that businesses may face in 2014? That's actually a very good question, Adibimpe.
In 2024.
Yes.
All right. So as we go to 2024, currently you have market risk, which is very big. So when I look at market risk in the presentation, I talked about 4 different risks: interest rate risk, FX risk, commodity and equity, but the focus will be more of the first 2. So as you go into 2024, number 1 is that you need to be mindful of how do you manage your interest rate risk. So one way is if you are a business that depends a lot on, taking loans and all that. So you also need to be sure that you are able to also transfer the cost of rising interest rates on loans to your customers. So do you have a product in such a way that your customers too can be able to, still pay more for the loans as you expand? You must also ensure that you are able to transfer those additional costs to your customers. So interest rates also is a function of inflation. You also need to consider the fact that the purchasing power of your customers too will have reduced with high costs of high interest rates as well. So these are some of the things you have to consider. FX also is very key. If you are importing certain elements or certain raw materials as part of what you use or probably equipment, then you are going to be exposed to FX costs. If you get FX income, it is helpful to you. But if you are having FX liability or costs, it's going to be a burden to you. So as much as possible, you also need to manage your FX costs. So that's one key area. Then from the credit risk point of view, once you are also exposed to credit sales, you also need to be mindful that things are getting tougher for most of your customers or your counterparty. So the probability of payment also will have reduced. So 3 key risks I will tell you up front will be the market risk in form of interest rate risk and FX risk, and also the credit risk also will also be a key thing to consider. Regulatory risk also will come into play depending on how exposed you are to different regulations happening in the country. So depending on what, either you're exposed to CBN or to SEC and all that. So you also need to be mindful of new laws as applicable. So I'll pause there. I don't know if Gerard wants to add to that, or I can see there are more questions already rolling in. So I'll pause there for now.
Okay, thank you very much, Biodun. Like I already overemphasized during the session, so it is very important we also take cognizance of the fact that risk would always emerge yearly. So part of it is we shouldn't cushion the effects of digital risk, which is basically cybersecurity. Within the digital space, we've had issues where a lot of cybersecurity threats are currently on the rise. And again, it is one of those things that have been anticipated to also be on the rise in 2024. So businesses need to ensure that they are well equipped to respond to the high rise in terms of the level of cybersecurity risk currently emerging. And then I see a question around managing interest rate, that is managing risk within high inflationary environment. For me, the best strategy in terms of mitigating market risk, which has already been highlighted during our slides, is basically adopting the principle, not putting all your eggs in one basket. So diversifying your portfolios, your investments, would also help you cushion the effect of market risk, which is basically speaking to not just investing in a particular instrument. You can consider investing into varieties of instruments based on what the business risk appetite has clearly defined, right? So when trying to identify opportunities, you need to ensure your business capacity in terms of taking risk, as well as willingness in taking risk as well. Yeah, so just to add.
Okay, so Fisai, I don't know if we can attempt other questions, or
yes, please.
Okay.
No, you can go ahead.
Okay, so because I see a lot of questions are now
yes.
rolling in.
Yes,
So
go
how
ahead.
can we effectively mitigate market risk in view of high inflation in the country? Gerard has touched on that, but it will also be good for you to also have inflation, should I say inflation products that can also rise with inflation so that you can also be able to take benefit of it. For example, when you sell a product that also rises in price with inflation, that protects you. But if you have a product that does not rise with inflation, which you cannot increase the cost, then you have to relook your business model as to what else you need to do to manage the inflation. So there's also a question around transfer risk. I need more explanation on transfer risk using insurance as an example. So essentially, transfer risk is any risk that you think that it is cheaper if a third party is managing than you are managing it. So I take, for example, you are in a business where you use different assets, either laptops or different items that could go bad, or different cars. Maybe you are in a car business and you have different cars. And because you know that you will be prone to accidents and all kinds of things going wrong, you can decide to actually have an insurance. So all you do is to pay the risk crystallizing, you can be able to get the full pay for that risk, as opposed to you not doing anything. Every time that there's a need to pay, you don't know how your liquidity will be at that point in time. So you are not able to, to make good of that payment at that point in time. So in summary is that any aspect, any business you are doing or part of that you are doing that you feel that other party can help you manage it better, then you can transfer it and just pay an insurance premium for that risk. For our cars as well, we also pay insurance on it just in case it's an accident. Then what can you do on your pricing to customers if my products are perfectly elastic? I assume what you mean by if you cannot increase price, what do you do? Because if you can increase price based on the cost you have, it's easy for you. But if you cannot increase price because either you have too many competitors that would not enable you to increase price as a result of the increased cost of production, or probably because your customers are saying if you increase the price, we are going to leave you, then you have to think to be able to recoup the extra cost that you are actually getting on those businesses. I think one key thing I would like to say when I listen to all these questions is the fact that we need to constantly look at our business model. So there are lots of things that are mitigating against the businesses. External pressure. Your customers are saying, hey, I can't pay so much because of my earning capacity has been reduced and all that. So the question is, are there other things that we can do to the customer to enable them to pay more? Can there be more value-add services that could be free of charge to enable them to be able to pay the rising fees? Could there be other innovative way of doing business to reduce costs? So I would think for our fees that they're being paid is to really look more as to what other things can be done within the business model so as to be able to still be able to make a decent profit from the efforts that is put into the business. So that will be all from me. Gerald, I don't know if you want to add to some of these comments, these questions.
Okay, thank you very much, Biodun. Just like you already emphasized, largely speaking to what are the additional value adds you need to bring on board in terms of your strategy. Again, it is very important that annually when you, as a business, so speaking to the size of your business actually, so it is very important that when you are conducting your strategy, right, building up your strategy for the new financial year, or building up strategies in terms of embarking on your business journey, it is very important to also align risk. So your strategy should also be risk-based, driven from the point of view around linking your potential returns, which is basically the profits from your business, and also trying to define or assess the potential risk that may emanate your strategy. Your strategy basically should be risk-driven as well.
Thanks, Gerard. Fisayo, is back to you. I think there are some questions that has to do with the bank's products as well.
Yes, thank you very much. So I'll quickly scroll up and try and that. Okay, so I'll take the phone number, I have a feedback for me to read out the contact details. So for the call, you can call on 07 000, so 07 000 222 466. So that's for calls. For WhatsApp, you can WhatsApp the bank 070 45 222 933. You can also send email at info@accionmfb.com. So I think that answers the question. Okay. Okay, Kelly, please, Action Bank panel have not answered the customers that were supposed to settle the fraud case. Okay, so Kelly, thank you for bringing this to our attention again. Please send an email or WhatsApp. WhatsApp might be easier for you because again, this is an open certain information here. So please send us an email or a WhatsApp message, and then we'll be able to provide you an update regarding that. I think okay, this is for Kano again. Okay, good morning, sir. Please, at the last meeting, we are given the opportunity to top up loan. So far, we are in step 7 in my bank. In my bank, okay, I'm going to assume that is in my branch. I was told not everyone. Please, sir, can you explain it very well? Okay, so what I'll do is I'll get one of my colleagues to also speak to this. Then I have Kelly. Kelly, the issue in Kano, I think I've already addressed that. For someone who is already working on jobs, Abiodun, did you take that already from Amusire Matthew, or should I read that?
Please read it.
Okay, for someone who's already working on jobs that manage risk, but which job history isn't tagged risk manager or risk officer, what can this person do going forward?
Okay, so I can
going
take that.
forward, yes, applying for jobs with the subject title. So I think this is more like maybe navigating professionally. Yes, you can take
Okay.
that. Thank you.
So I mean, if you want to be a risk manager, you can, and I think there are several opportunities. So one thing Fisayo talked about myself is that I have a couple of certifications. So you can also decide to pick a certification in risk management. There are different certifications. I have some, and there are still others out there. So pick one around that and ensure that you actually have experience also in the job you're applying for. And of course, putting your best in everything that you do. So those will be my few words. If you don't have the title yet, have a professional exam, go through some courses, get some certificates, and for your to-be employer, discuss those things, and then show some factors you are able to do the job based on what you know, and that with some support you can do more, then that should be fine. I think that would be what I would like to say on that. Thank you, Fisayo. Back to you.
Thank you very much. Yeah, so how do we get a loan? So the bank has an array of products and services for us to use. So it depends on the product or service that you actually require. You can visit the bank's website, www.actionmfb.com. We would also drop the link to access the bank's digital product. So we do have the Brighter Loan, which is a digital loan product. And then we also have the school fees loan digital loan product. We'll drop it here so you can also navigate it and apply for those loans. Thank you very much. And I think also, if there are other loans you also need, maybe like housing loan, school loan, solar loan, we do have assets loan as well. It might be helpful for you to send a WhatsApp message or a call to the number in the chat box. We'll take the number again, and then we would location, and then thank you. So I think there's another. This is quite. Oh, so wow. Let me just take it from here. Can you move it up a bit? Okay. Mine is an appeal. I sincerely want to appeal to the bank to give more time to balance of my outstanding very last term loan. Had chronic health issue from the month of May to September, still on drugs as I speak. Okay, all right, thank you very much. So I think this is the feedback is noted. Again, please route this through your account officer. Thank you very much. Can you go down, please, so I can see? Okay, so we've dropped the link to access the digital loan in the chat box. It's very straightforward. Just click the link and download the app, and then you can be able to navigate it. And then also there's a portion for the school fees loan. You also see it there as well. If you still need any clarification or support to access these loans, please reach out to us. You can reach out to us through the channels that we've identified, and then also on social media, on Facebook, Instagram, Twitter, TikTok, and then YouTube as well. I would like to know your Port Harcourt address. Okay, so we'll drop that as well. For the other customers that are joining for other locations, I think we should also drop the link for the location spread on the website. So that is on the website. You can also get that information there. For Port Harcourt will be dropped very, very shortly. Thank you very much. I don't know if there's still any other question. I think I captured everything. I'm not sure I missed any other. Yeah, I think I captured everything. Thank you. Thank you for that. So I think let me just apologize for that. Because I assumed Mr. John wanted to actually speak. So I think going forward, taking from the lessons from Abiodun and Gerard, I think to mitigate this risk of maybe Akin would just stick to the comments chat and the Q&A box to take some of those questions. Thank you.
I think there's another question. Can someone get school fees?
Yes, yes, you can. So I think I would also, okay, the link has been dropped. Thank you for that, Abiodun. I think I missed that while we're trying to handle the issue. Yes, you can. You can access the school fees while you're still on a loan from the bank. Is there any other question? Especially for the EY team, we don't get to have them on the call every time. So it's really important that, whatever questions that we have regarding risk management and our businesses, they're able to support us with it. Okay. Okay, I think that's about it then. I'm not sure we still have more questions. I don't know if there's anything from your end, Abiodun, maybe to close, or from Gerald's end as well, so that we can.
So I have some final words to everyone. Okay. So the first one is, there are three, The first one is as much as possible, avoid a currency mismatch. So what I mean by that is that if your business is in Naira and you have liabilities in dollars, as much as possible, try to avoid that. It's better the other way around, but not when your business is in Naira and you have liabilities or payments to be made in dollars. So that's one. Number two, as much as possible, structure your outflow or your payments to align with your inflows so that you can manage your liquidity well. So you don't have a situation where you have to pay a lot when you don't have inflow coming in. So if you can structure it, it's always good to do that. Then the third point is, if you notice that a payment might rise or increase over time, if you can lock it today for a period, please do, rather than allowing it to move with increased payments over time. So if you have information, you are sure that the prices could go up, lock in more like what you call like a forward pricing and so on, so that you can avoid the growth in the payments. So that will be all from me. So thank you for having me. Gerard, over to you.
Okay, thank you very much, Abiodun. I think you've already addressed it. And also to say thank you to the Accion team for also having us on this session. So that'll be all from me.
Thank you very much, EY team. We do appreciate you joining us to provide insights to our business owners. So we don't want to take most of your time. So I think we'll just go ahead. If there's still no other questions to close, we're dropping the bank's contact details. I'll quickly read through it again for some of us that have requested that I should read it out. 070-07-000-222-466. You can also engage on WhatsApp as 070-45-222-933 or send an email info@accionmfb.com. Thank you everyone for joining us. Do enjoy the rest of the day. Thank you very much, EY team.
Thank you. Bye-bye.
Thank you very much. Bye.
Nítòótọ́, ṣé pé tí mo bá ṣí àkáǹtì pẹ̀lú Accion wọ́n máa máyé rọrùn fún mi?
Ina son iya karɓar kuɗin Accion Bank na yi amfani kai ƙara kasuwa ta.
Chai, Accion Bank mo fara ni ATM card.
No need to stress, I no need the stress. With Accion MfB Bank, I deal with the best, I no settle for less. Bank where they make it life better. With chicken